soon here with the latest portfolio update. I'm just going to run through some of the trades we've got open at the moment and also talk through some of the ones that have closed out recently. So I'm going to start with this Ripple trade from yesterday. And this is a frustrating one because what happened was, if I clicked at the daily again, what we saw was this breakout here, and this was a break above the August highs and that we saw fail twice. And it kind of went back to these levels that we haven't seen since there was really a crypto hype on. So the thinking is here that what's going to happen is we break out, everyone's going to get kind of all hyped up again, and it's going to get fueled all the way up, potentially to this 0.4 level. And anyone who was short in this period could have got squeezed out. But instead what we saw was a very quick sell-off. So clearly everyone's kind of net long in this market. And we rallied 6% early in the day, so we were at a profit originally. And then we crashed all the way back down by actually 18%. So we had an 18% swing, which is kind of not too out of the norm for cryptocurrency, but it was pretty big for yesterday, or compared to recent volatility anyway. And it's okay to lose these. It's very frustrating just because it's one of those trades that you open and it closes the same day, but the risk reward is always there on these ones. I mean, if we just flick back to the last time this broke out properly like this, you can see how crazy these can go. So we kind of, last time it broke out the Bollinger Band to the upside with the trend, so we wouldn't count this because the momentum's kind of going down. Last time it broke out with the trend, it rallied all the way from 0.06 up to 0.04. So if you're trading a breakout like this, you can make thousands, even tens of thousands very quickly. So it's definitely worth taking these trades, even if you do run the risk of getting kind of whipsawed and getting caught in a false breakout. So I lost $400 in this trade, but kind of averaging out across all the cryptocurrency trades I've made. I mentioned on the post yesterday that this is only the 6th cryptocurrency trade I've actually lost, and the average loss has been something like $250. And comparing that to the winning trades, which is, I think I've had 12 or 13 winning trades, and the average of those has been 1,300 profit. So the risk reward's definitely there, and although the kind of frustrating that this spiked up so quickly and spiked back, I'm still keeping an eye on this in case it does decide it wants to break up again, and then we might see the rally that we expected the first time round. So I'm still going to keep my eye on this market, and I am going to take any signals I get. So just about keeping discipline on these, and making sure you do take signals, or making sure I'm going to take signals when they arise, and not get kind of caught up in the fact that the last trade was a loser. And the other market I want to talk about is this EURGBP trade. So this is a classic mean reversion trade that I always keep talking about. There's another one of these at the moment. I'm in platinum, and we also had GBPJPY last month that did pretty much the exact same thing, and I made $1,700 on. So these patterns are very very consistent and very frequent. So if you don't understand these, make sure you go to the website and have a look. So what we see is the market rallies kind of 12% in May to September period. It gets overextended. We see this big sell-off, so everyone who's been buying in this period here starts taking their profit. Fuels a bit of a panic, and we see it drop very quickly in kind of 3 weeks in the end of August, start of September. And then we see it consolidate and start breaking back with the trend. So our signal to buy was on this green day down here when it broke back in. I think I also had a position in here that I closed at a loss. But the signal to buy was in this green day here, and you can see it's pulled up pretty quickly, and I'm at about $400 profit on eToro and about $600 on plus 100. So this is doing very well at the moment, and if it's starting to consolidate a little bit, I'm looking to kind of see it break these highs around 0.9 and the kind of trend to resume. And if we do start to see it pull back, then I'm probably going to see the momentum turn around, and I'm probably going to close out pretty quickly. And the last trade I want to talk about is this NATGAS trade. So I actually sold again on a mean reversion trade here. So the momentum's going down. We see it pull up. It gets a bit overextended, and it breaks back in. So I sold on this day here, and I kind of held through this whole period, even when it spiked up from kind of 2.9 all the way to 3.1. I held in this period. I didn't panic, didn't close out, and it's paid off because I've made about $2,000 in this trade. I closed out one position on this MA cross on plus 500, so that was about just over $1,000. And you can see on eToro I'm up around $600 as well, 620. And I'm gonna probably look to close this in the next day or two. If this doesn't break out at the bottom of the channel, then I'm probably gonna close out, or even tonight, because it looks like we might see it kind of start pulling back and kind of maybe come back to this 3 level. I don't want to be giving away all my profit in this. And the interesting thing about this position is actually you get paid rebates for holding a NATGAS sell position, which means you get paid just to hold this position. And I've actually made $211 on eToro alone just from these fees, and on plus 100 I made the same. So it's nearly $500 just from 3 weeks of holding a position, on top of the $1,600 profit from the actual trade. So I'm looking into a strategy just to hold NATGAS short positions, just to kind of collect these rebates, and I'll keep you all posted if anything comes through from that. So you can see equity's down to the 19,000 level, down from 22,000 it was its peak in mid-September. So it's a drawdown of about 14%. Now, it's very easy for people to panic in this period here, and this is really where trading starts to get difficult, because it's very easy when you're making money all the time, keep doing what you're doing. But the second you start seeing your account go, it's very easy to panic, to close positions early, to overtrade, and this is where you need to make sure you kind of maintain that discipline, maintain the discipline to keep trading consistently, maintain discipline to close out positions when you're meant to close them out, maintain discipline to manage your risk properly, that's why I kind of dedicated a whole 5 sections on the website to trading psychology, because this is where I struggled the most, where I started off. You have a losing period, you don't understand what's going on, you start questioning your strategy, you start questioning your system, and that's kind of a recipe for disaster, because you start throwing all kinds of emotions into the mix, and that's what we absolutely want to avoid. We don't want to be trading any emotion. So I thought it'd be useful to go through this model that I showed in a portfolio update a few weeks ago. And this is the system I trade. This is the model that everything's based on. And this graph here is a very interesting one. This is the drawdown. So this is the drawdowns we expect between 2001 and 2015 if we traded this system exactly how we do. And you can see that this dashed black line is the average over the period, and the average drawdown is about 10%. So we're actually not very far above the average at the moment. What that means is that, imagine your account goes from 10,000 to 15,000 and then comes back to 13,500. So you've lost $1,500. That's a drawdown of 10%. And that's kind of the average level you expect to be at. Your account isn't always going to be making all-time highs. Otherwise, it'd just be a perfectly linear equity profile, and you'd be the richest person in the world, and no one has that. So the important thing is to kind of maintain discipline through this period and keep trading, because if I just flick through a period here, let's go find where we have $19,000, just because that's where I am now, and it might be quite relevant. So it goes to 13,000, and here we go. So we're up here. So we in this period here we're kind of at 19,000. This is in 2002, I think. Yeah, so here we go, 21,928, which is where my equity peaked a while ago. So, or even here, 21,700. Imagine this is where I was a couple of weeks ago, all-time account highs, and then I've seen it pull back about $2,700. Very similar to what I've lost at the moment. 12% drawdown. I'm at 13-14% now. But if you just keep trading through this period, you can see that you do come out of it, and you do come out of it stronger. So it comes from 19 up to 24, 25, up to 28, 30, and we actually see it pull back from 36,000 to all the way down to 30,000. So imagine losing $6,000 in this period here. But then again, if you keep trading, eventually come out of it, and then we're up to 46, 47,000. And it continues like that. So you're going to be bouncing around between making all-time highs and a kind of 25% drawdown, and you've just got to manage that emotion that comes with losing that much of your account. So it's going to be interesting how this plays out in the next few weeks. I've gone through much worse drawdowns myself, and I will go through much worse drawdowns, but I've never had a kind of website and Facebook group that's also there involved. So I'm going to be interesting to see how people respond And hopefully there's a lot of lessons to be learned by periods like this, because the reality is that this is what trading's really like. There's a lot of periods like this that are very difficult emotionally, psychologically, and they're by far the periods where you learn the most, both about yourself and about your trading strategy, and whether you have the discipline to do it. I mean, it's not an easy process to do, and this is why so many people fail, and this is why I blew my account a few times at the beginning as well. So it'll be interesting to see what happens, and hopefully we'll come out of this drawdown period and we'll kind of spring to all-time highs. My total equity is about 32,000 at the moment if you include plus 500. So hopefully if we do see a period like I just showed you a second ago where we double our account afterwards, then there will be a nice $30,000 coming through in the next few months. So that's what we're looking for, that's what we're hoping for, and we'll just have to see how it plays out. So in the meantime, I'm going to keep trading with discipline, keep giving the signals, keep talking about new setups and ideas, and yeah, so business as usual.